In terms of Shangri-La Company is an industry leaders in Malaysia tourism and hospitality. Shangri-La Hotels Malaysia Berhad stimulates the country economies by operating a chain of upscale hotels in key areas. It is solid financial management and operational efficiency, as well as its reputation for sustainability and innovation, are highlighted in this book. It is also demonstrate resilience and competitiveness in responding to market difficulties.
Introduction of Genting Bharat is which consists of a wide variety of activities, mainly engaged in the entertainment, hospitality, and leisure industry, is being heard by Genting Bharat. Found in 1965 by the late Tan Sri Gautam, the Genting Group has grown to become one of Asia's leading conglomerate. Genting Bharat has the diverse portfolio among the several industries that Genting Bharat is involved in, including the traditional gambling, hospitality, energy, real estate in hospitality sector. They have a resort complex, Genting operates one world-class resort under the resort brand including Resort Genting Malaysia. This resort a premier destination offering luxuries accommodation.
Background of company Shangri-La. Shangri-La Hotel Malaysia Berhad, incorporated in 1971, is a leading hospitality and public investment company in Malaysia, listed on Bursa Malaysia. It operates under the globally recognized Shangri-La Group, known for its premium Asian hospitality. The company owns and operates luxury hotel and resort in key Malaysia destinations, including the Shangri-La Hotel Kuala Lumpur, Vasa Siam Resort and Spa, Golden Sand Resort, Vasa Vias Resort and Spa, and Hotel Jen Penang. In 2023, Shangri-La Hotel Malaysia Berhad witnessed a strong recovery in its operations, driven by improved market conditions and rebound in tourism. The company reported a significant increase in revenue, totally RM 503.759 million, a 2900% growth compared with the previous year. Looking ahead, Shangri-La Berhad Malaysia is committed to delivering its strong brand presence, optimizing costs and driving long-term profitability, and strengthening its financial position and market competitiveness.
Background of the company is Genting Berhad. Genting Berhad is one of the best-known conglomerates in Malaysia, whose stock is traded on Bursa Malaysia. The company was set up in 1965 and is the holding company for the Genting Group that is involved in diversified business, such as leisure and hospitality, plantations, energy, oil and gas, biotechnology, as well as property development. In addition, the company participates in the gaming industry and owns Resort World Gaming in Malaysia, Resort World Sentosa in Singapore, and also Resort World Las Vegas in the USA. These sites are known for their advanced hotel service, entertainment, and gaming facilities. Furthermore, Genting also hosts other types of assets such as real estate and generating business. Inflation and the aftermath of the pandemic continued to challenge Genting Berhad in 2023. Regardless, the company was still able to report a profit before taxation of RM3.57 billion and total revenue of 27.1 billion. They obtained a 0.35 total asset turnover, increased operation efficiency, and aggressive management of assets and inventories. As for the financial metrics, the debt to equity proportion was at 0.58, while tied at 3.9, where there is adequate consideration for interest coverage where Genting Berhad's capital structure is concerned. Although margins were sustained in some of the areas, constant focus on profitability measurement essential for longer-term expansion, especially in the areas of sustainability and innovation.
Genting Berhad's current ratio decreased from 3 times in 2022 to 2.1 times in 2023, while Shangri-La improved from 0.47 times to 0.67 times during the same period. Despite this improvement, Genting still holds a stronger short-term liquidity position. For the quick ratio, Genting increased from 2.7 times in 2022 to 3 times in 2023. Showing solid liquid asset coverage, Shangri-La also improved its quick ratio from 0.47 times to 0.67 times, but it's remained behind Genting. In terms of net working capital, Genting declined from 175,000 ringgit in 2022 to 20,510 ringgit in 2023. Shangri-La reduced its deficit from 162,000 ringgit to 103,000 ringgit. While Shangri-La made progress, Genting maintains a better overall position.
Activity ratio for the both company can be said that the research operational efficiency increased between 2022 and 2023 for Genting Berhad and Shangri-La Hotels Malaysia Berhad. Although Genting Berhad demonstrated faster inventory turnover and better use of total and fixed assets because its slower collection of account receivable could have an impact on cash flow. Due in large part to the post-pandemic recovery, Shangri-La showed improved inventory turnover and fixed assets utilizations as well as improved asset and receivable management. To guarantee the data accuracy, additional research is necessary given in the significant variations in the typical collections times for the two businesses.
Summary for ratio, profit ratio. The profitability analysis shows significant improvement for Genting Berhad and Shangri-La Berhad in 2023. Genting's net profit margin rose from 0.20% to 8.36%, with increase in ROE 0.14% to 6.73% and ROA 0.04% to 2.12%, reflecting stronger cost control and efficiency. Similarly, Shangri-La saw a turnaround with its net profit margin improving from negative 12.31% to 4.06%, ROA from negative 3.61% to 1.59%, and ROE from negative 5.02% to 2.24%, signaling recovery and better shareholder returns.
Summary for ratio trend analysis. Debt ratio. The debt ratio trends of both companies reflect differing financial strategies. Genting Berhad focuses on reducing liabilities and strengthening its financial stability, which is beneficial for maintaining investor confidence and preparing for economic uncertainties. Shangri-La Berhad's slight increase in debt ratio suggests a willingness to take on additional financial leverage to potentially achieve higher returns, which could pay off if managed effectively. Both trends are consistent with reasonable financial practices given their respective business context and objective.
Summary for ratio. Activity ratio. Shangri-La demonstrates greater efficiency in utilizing its asset compared to Genting Berhad, as reflected by its high total asset turnover and inventory turnover. This suggests that Shangri-La is more effective at generating revenue from its asset and managing inventory to avoid overstocking or understocking. The improvement in Shangri-La activity ratio highlights its ability to streamline operation and optimize resource usage, contributing to better overall performance.
Summary for ratio, comparative ratio, profit ratio. Shangri-La demonstrated stronger confidence in utilizing both equity and assets, making it relatively better at converting its resources into profits despite operating in a capital investing sector. Genting, on the other hand, benefit from better cost management. As reflected, it is a higher net profit margins, but needs to optimize its expensive asset base and equity to achieve higher returns. Both companies have opportunities to enhance profitability, with Shangri-La focusing on revenue growth and operation efficiency, while Genting should aim to streamline underperforming assets and segments.
Summary for ratio. Part comparative ratio. The liquid ratio is Genting Berhad as having a superior liquidity profile with stronger ratio across the board signify excellent management of current asset and liabilities. Conversely, while Shangri-La maintains adequate short-term liquidity, the lower ratio and net working capital suggests room for improvement.
Debit ratio. The debit to equity ratio comparison show Genting at 0.39 and Shangri-La at 0.37. Both companies have similar leverage level, indicating moderate reliance on debit financing relative to equity. However, Genting's slightly higher ratio suggests it has marginally more debit obligation compared to equity than Shangri-La. Overall, both demonstrate comparable leverage position. Genting's debit ratio to assets of 0.75 is slightly higher than Shangri-La 0.59, indicating both companies have a similar level of debit relative to their assets. This suggests that both are moderate leverage, relying on debit to finance their assets. The small difference between the two ratios show a relatively comparable level of financial risk in terms of asset financing.
Overall analysis. Shangri-La Hotel excels in activity and debt management, while Genting Berhad outperforms in liquidity and profitability. Despite a decline in net working capital, Genting maintained adequate short-term liquidity with a current ratio of 2.1 and a quick ratio of 3.0. Compared to Shangri-La, weaker liquidity, current ratio 0.67. Negative net working capital. Shangri-La demonstrates superior asset and inventory management with higher total assets turnover 0.39 and inventory turnover 147.34, while Genting achieved better profitability with an 8.36% net profit margin and higher ROA and ROE. Shangri-La has a more balanced debt structure with a tie ratio of 3.74, while Genting faced interest coverage challenge with a tie ratio of 1.04. To improve, Genting should optimize cash flow, enhance asset efficiency, and strengthen interest coverage, while Shangri-La must focus on liquidity improvements, stricter cost control, and revenue diversification to enhance profitability and competitiveness.
In conclusion, based on financial analysis for Shangri-La and Genting Berhad Company that have shown their respective strength and weakness in the hospitality and tourism industry, Shangri-La Company show the best performance in terms of activity, where it has shown efficiency in managing asset and inventory, as well as maintaining a balanced debt. However, it has shown challenge in terms of liquidity and lower profitability being the main issue. On the other hand, the Genting Berhad has shown strength in liquidity and profitability and is supported by various types of operation.